Good morning everybody, and welcome back to my channel where I share educational videos about Forex trading as well as an insight into my journey as a Forex trader. As I'm recording this, it's 6:45 in the morning GMT on Monday the 26th of June 2023. My little one is still in bed, so I thought I would hop onto the computer and just share with you my weekly outlook for the week, day trading pound against the dollar. So all of the resources and software I'm going to use in this video will be linked in the description below, so make sure you check those out. And as always, please remember to like and subscribe to the channel if you're not already subscribed, if you like the content. And let's dive into the analysis for pound dollar for the week. Starting with the fundamentals, so here I am on forexfactory.com, which is a brilliant free resource. It allows you to check out economic news and upcoming events. I have this filtered on orange and red, which is the more higher impact news for the week. Now it does show you news for all the major currencies, as you can see here, but as I am just day trading pound against the dollar, they are the pairs that I'm going to be focusing on. And as we can see today, there's not really a lot of major news coming out today on the Monday. Tuesday, it looks like we've got a little bit of news for the dollar coming out in the afternoon, and major news here at 3 o'clock in the afternoon. Moving on into Wednesday, we have got a little bit of news, mainly speakers for the pound at 2:30 and the dollar at 2:30 as well. So that might add a little bit of volatility to the market depending on how that goes down. And into Thursday, this is the kind of news I'm more interested in, the higher impact news, final GDP for the quarter, as well as unemployment claims. Now, those kind of key news events do tend to add a bit of volatility to the market and bring some volume in. So depending on whether it is good compared to the forecast, if it's good news or if it's bad news, could affect the fluctuations of the pound against the dollar. So it's just really good to be aware of when these are released. So for me, I won't be probably in any trades before that time because I'll wait to see how the news affects the market, and then I can gauge and see whether that lines up with my technical analysis and if it presents a trading opportunity. And then finally, moving on into Friday for pound dollar, we've just got some news on the dollar in the afternoon, core PCE price index monthly, which is a change in the price of goods and services purchased by consumers, excluding food and energy. So looking purely at the economics for pound dollar, it looks like we might have a bit of a quiet start to the week, and it may pick up possibly come Wednesday afternoon after these talks. Going into Thursday and Friday, might start to see a little bit more movement in that pair. But my main analysis is carried out on the chart. So here I am on TradingView, the charting software that I've used for about 5 years now. It's a brilliant platform, and this is what I use to do my technical analysis. So I like to do a top-down analysis starting with a weekly time frame, gauging how the week went last week and how it might move moving into this week. I then drop to the daily time frame, which is what I like to use to place all of my key levels, which are very much important for my trade plans, because I tend to plan trades around reactions to key levels. So these could be key levels from the daily, or they could be institutional price levels, which are the black lines that you see here. So let's start with the weekly, and first things first, I'm going to just remove my analysis from the previous week, but there will be a few bits I leave in because they are relevant. So they include these two boxes here, which are relating to the daily, and I will talk about them in a moment when we go to the daily time frame, and also this yellow box here. This blue line here is just representing this weekly key level where we used this before as a pullback, and then we had another tap here, but we did break through that. There's still a chance that on the weekly we might be in a phase of pullback, and that could be a level that price is drawn to. So that's why I've left that in there. And as I said before, these black horizontal lines are all institutional price levels. So they are all plotted at institutional levels, so the half dollar and the whole dollar, which can be very significant for where institutions place their orders and where there might be liquidity sitting in the market. Now, last week seemed to be quite a choppy week for the pound dollar, and you can probably see that in the price action here because we closed within the range of the week before. The week before was a very strong bullish candle up, tapped into this fair value gap area here. But last week we had a small doji candle, so it was quite a bearish week. We did close red, indicating this pullback. So a very simple analysis for me from the weekly is just simply identifying that we are in an overall larger frame upswing. We're moving up, making higher highs and higher lows. But last week we closed a little candle down. It's an inside bar candle. It's inside the previous week. It shows that price is currently in indecision. It's ranging. It's likely to, if it breaks the low of that candle, to probably continue coming down, pull back. So it's not looking to be a active week from today. And that, in combination with the fundamentals, for me straight away makes me think that maybe if we get a break of the low this week, that price may just sort of come down a little bit, find some sort of support, and then maybe start to draw back up. But time will tell. It might need more time to pull back, like this one here. This took a few weeks. But it's always good to drop down to a faster time frame like the daily to get more insight. There's more data here for us to analyze to see what price is likely to do. So I said about these levels before, this yellow area, I've had this on my chart for some time now, and if I scroll to the left, you can see that there was a big gap down in price here. We had one candlestick, which was part of this little range. Candlestick number 2 was a huge candlestick down of momentum, and then candlestick number 3 continued down, which meant that candlestick number 2, there were no wicks in there, and it created this gap in the market, a fair value gap. And that's what I've marked with that yellow area, because fair value gaps act like magnets for price. It might be that's caused the start of this pullback. We might just be pulling back to gain some strength to push back into that area. It's likely to see a reaction there, so that's why I'm leaving that in. And the other key bits of analysis I've left in here are these 2 rectangular boxes. Now these are using Fibonacci retracement. So I went from the most recent pullback on the daily, which was this one, because we had a high here. We pulled back down, we made a low because it then pushed up and broke this high. Excuse my dog snoring. So if I go from the body of this most recent low and apply it to the highs here, you can see these 3 lines, which are the optimum trade entry levels, the 62%, 70% and 79%, all line up on this box. I just prefer to have a box because it keeps my charts tidier. So they represent this key Fibonacci level here, which means that if we do continue to get a deeper pullback on the daily, which can take quite some time. This one started from Wednesday the 10th of May, and it wasn't until the end of May that we started to come out of this. So I wouldn't expect to just sit on the sidelines watching this happen. I think there are still trading opportunities in pullbacks for me personally, day trading on the faster time frame. And that's why I have these boxes, because it helps me to frame price. This is another one of those Fibonacci retracements, but that uses the 4-hourly time frame. And for me with that, it is acting like a little bit of a support at the moment. But if we do get a break and a close below that on the daily, the next level that it'll probably target will be this weekly level. And if it breaks that, it's probably going to be this Fibonacci level. So it helps me to frame where price is likely to move to, and it helps me to gauge things like entry, stops and targets. But for now, zooming right in on the daily time frame, which is the time frame I generally base my trades on. It's where I place my key levels. It's where I make my decisions on a bias from. And at the moment, even though we're on this larger uptrend, short term, we're coming down. So I'm quite likely to want to follow the trend. And to do that, I like to set key levels on the daily. So let's start off with the previous daily high. And the previous daily low. You can see even though these candles are quite small, we had a huge wick rejection of this area, but then the following day, price tried to rally up and we had a huge rejection up here of the highs, making this big wick rejection, closed back down bearish, and then continued bearish. So there's a pattern here that price is breaking the previous daily lows. And this is the lowest of this pullback move. Now, although we are in this uncertain area, because on the 4-hourly time frame here, that is a Fibonacci retracement of this little pullback here, the most recent pullback. And those are the same 3 lines matching up here. The thing that's interesting as well, the 4-hourly just gives you another insight into the movement of price. And then once again, looking at structure, we've come up, we made a high and a low, and a high here, but then we're in this little pullback, so we made a low, a high, a low, a high, and a low. we actually broke that previous lower high here, but then we got this huge wick rejection, and then we got some momentum. We came down and we made a new low, which showed that there was a battle here and the buyers actually lost because the bears took over and they closed lower, which to me shows that we are still in this downtrend. So my game plan really for the week is I'm going to just try and play it safe. I'm not going to be jumping into any trades. That in combination, in confluence with the fundamentals, I do believe it's probably going to be a little bit quieter start to the week because we don't have a lot of major news coming in anyway, and we are in this consolidation. So for me, for day trading opportunities, when the New York session hits, which is 1:30 GMT, and that's when I tend to trade, I will see if there's any reaction around these key levels. If price does something like this and comes down and we get a break of the previous daily low with some momentum, it closes below that and this fib level, I think that's likely we might get a little retest, which could provide an entry short and a ride down to continue this pullback. However, if especially in combination with news, if it brings in some strength to the market and we get a push above this level here, and especially this level, which is the next sort of structural potential resistance level, it's a level there to be aware of. If we get a break of that with momentum and again a retest, that could provide a nice opportunity long to then retest these highs up here. So I'm just going to be watching these levels in the week and just seeing how I can get in and out and just ride this little pullback safely to capture a bit of profit, just to keep me going until the larger moves and larger swings come back into the market. So that's my game plan for pound dollar for this week, the week commencing the 26th of June. As I mentioned, this is a day trading strategy, so they're the levels I watch, and then I will execute on a faster time frame, like the 5-minute time frame. If you are a complete beginner to the Forex market and you want to learn more, I have actually got an ebook coming out very soon. Due to popular demand, I get asked a lot of questions about how to learn Forex, so I thought it's about time I put together a book to help guide you. So if you're interested in that, do drop me an email. I'll include my email on the screen. It's emily@mindfullytrading.com, and I can add you to the waiting list. Meanwhile, hope you have a great week trading. If you've enjoyed the video, please let me know by hitting that like button, and don't forget to subscribe to the channel so you can catch my future videos, and I'll catch you in my next video. Thanks for watching. Bye.